Well, Jeff Gundlach of Douville mentioned on CNBC today that he thought that the S&P was entering into a bear market. Where do you put your money? Bonds are certainly at risk because rates are heading up. And if you're in corporates, we're having downgrades because we're entering into a slowdown. And a lot of these companies are priced for perfection. And as the economy slows down, of course, they struggle to make their bond payments. And then they get downgraded. Just look what just happened to GE just a few weeks ago. GE, overnight, bondholders lost 15%. They got downgraded from AAA to BBB. And, of course, that's like one notch above junk. And if they go to junk, it's going to get another 15 or 20%. And keep this in mind, over $1 trillion in U.S. corporate bonds are one notch above junk. If they go to junk, bye. Rates will go up really high and it would make it very difficult to refinance. And of course, their bonds go down. If you're a bondholder, you lose money. So you can go to some treasuries, but then you have rate increases. And if you go to a really, really short end, you don't earn any income off that. So where do you go? So we've been telling everybody for months now, since last year, we've been warning that we have a correction in my business. And certainly in the real estate business, we are entering into a correction time frame. Not only have we got slowing, but now we actually have price declines in Dallas. We have them in Denver. And now over the weekend, we saw that Seattle recorded a 12% drop in price, not in sales volume, but actually literally in price in the last quarter. So we expect it to get worse, but I think it'll eventually bottom here in the next 8 or 9 or 10 months. And then we're off to the races for 4 or 5 years, and as the cycle changes. Of course, we keep in mind that we are, real estate and stocks and bonds are in a completely different correlation. We don't correlate, but maybe 8 or 9%. So we're completely different, but we are going to correct. We're correcting with them, so it could be a vicious correction, but it is probably a correction in an ongoing bull market, and most of the time we hold for 5 years. So you can deploy some capital here and get the income. And of course, our income is going to be probably 2 or 3 times what you can get in short-term U.S. Treasury bills. And we can get you income that comes each and every month. And of course, we wouldn't put all the money out, but we might put a portion of your money out so that you get some income coming in. Because, when you're my age, we don't want to spend our cash. We don't want to spend our money. We want to spend the earnings on our money, what our money earns for us. That's why we're so concerned about making sure we're in something that is appreciating and getting a cash flow. And we're going to spend the cash flow. We don't want to spend the capital on this. So if we can go ahead and spend a capital for the next 12 or 18 months and just clip coupons and live a good life, and we'll keep a good portion of that money for opportunity, because I do believe we're going to have a really, really good opportunity to buy some really quality properties and add to our portfolio for our eventual spikes that I'm looking for in the next 4 or 5 or 6 years, and then we'll sell into that. So we have really good time in front of us. We've been expecting this. This is coming right on according to forecast. So we can certainly help you in any way we can. I'm not saying that we should deploy all your money. You should really talk to your financial planner and find out when's a good time to sell some of your holdings, and let's start just transferring from one asset class to another asset class. And we're really, really good at that. We have really good properties. We're really, really good at it. We're here in Maricopa County, #1 county in America, 222 people net a day moving here. So we just have huge rental demand. And here's one I want to leave you with. If the housing market slows down and people aren't selling houses, it's great for us because people still need a place to live. And if they're not buying a house of their own, they rent one of ours, and that's what we do. So we provide a service. So we do that very, very well. We're really, really good at that. So if I can help in any way, please give us a call. My best to you. Bye-bye now.